This is the Michael Bryan Show. Hi everyone, welcome back to the show, and today I am joined with Jeremy Kasler, who's the founder and CEO of CaskX, revolutionising how people can invest in whiskey and turning things like bourbon into an investment asset. So we're discussing how to invest in whiskey and how to get the most out of it. Jeremy, thanks so much for taking the time and joining me today.
Thanks very much for having me.
So I'm curious about how you got started in the whiskey world.
Previously, I was living in Hong Kong and I was in the alternative assets market. So we were actually, at that time, selling Chinese contemporary art for investment in Hong Kong, believe it or not. And prior to that, I'd sold wine for investment. So I'd always been involved in kind of, passion type investments. And towards the end of my time in Hong Kong, we started getting asked about, could we source barrels of whiskey? It was kind of out of nowhere. And we were like, okay. And the people who were asking us were kind of, seasoned alternative investors in Asia. So we started to look at the market, and we realized that there was a few companies sort of springing up, mainly in the UK, actually, that were offering the service where they would procure barrels of whiskey, Scotch primarily, and sell those barrels to investors and help them to store it. And over a period of time, the value increases. So that was our first intro. And when I sold the Chinese contemporary art business, I was precluded from selling art or wine, actually, for a little time. So we thought, let's get involved in whiskey.
Now, it sounds a bit alien to people like myself, where you think whiskey as an investment, the go-to things are property and possibly businesses. So why is whiskey a good investment?
Whiskey as an asset is one of the few investments that, if market conditions stay exactly the same. So imagine, when you invest into whiskey and then 5 years later, there's no more buyers, no more sellers. The value of that asset is still assured to increase because it changes. It's unlike gold or some other investments of that type, which stays exactly the same, or even property. It evolves. So day one, you make whiskey. I don't know whether you ever tried it, but it's basically moonshine. It's very harsh. You'd have to be a real whiskey expert to appreciate the good from the bad with one-day-old whiskey. But if you wait 5 years, 8 years, 10 years, it transforms into something completely different. And therefore, its value changes along with that. So it's one of the few assets, like I say, that if market conditions stay exactly the same, it will still increase in value.
Almost like where things would be a different asset altogether. Like from the outset, someone from the outside looking in, is the actual asset different then if it grows or changes over time?
Well, it is, yeah. It's very different. I mean, it's almost like, investing into a studio apartment and 8 years later, you've got a 3-bedroom penthouse in some senses. Because we often do a side-by-side test with our investors, and we'll sit there and we'll have a glass of or a very, very small shot of new make or one-day-old whiskey, and then we'll have a 4-year-old, then we'll have an 8-year-old. And the difference is huge. There's a reason why aged whiskey, bourbon, Scotch fetches very high prices, and one-day-old whiskey is very, very inexpensive.
So is it simply a case of supply and demand then, where some people would drink it before, let's say, it gets to 10 years old? Or is there something else going on as to why the value increases?
Well, it's both. So the physical nature of it changes. So as we said, day one, it's a horrible, harsh, clear liquid. Year 8, it's a beautiful, smooth, wonderful drink. So that the value changes there. But of course, like any investment, you want other things to play, and of course, supply and demand. So what we see with Scotch, with bourbon, with tequila to a degree, is more and more people are drinking more and more expensive examples of Scotch and bourbon. So, for example, in India, India's a huge market. 50% of all the whiskey drank every year is drank in India, believe it or not. Primarily, or historically, most of the whiskey that we drank would be locally made Indian whiskey, inexpensive, $5, $10, $15 a bottle. But over the last, 20, 10, 5 years, we've seen a shift where people start drinking cheap whiskey and then they move on to more recognised imported whiskies, Scotch, bourbons. So the market is changing, although you hear talk about, well, there's less people drinking these days. There's less alcohol drunk in the West, but the value is increasing. So people are more choosy what they drink. And of course, you've got markets like India, China, South America, where this whole new enjoyer of whiskey and bourbon is coming into play and helping the industry.
I'm curious as to why someone might invest in whiskey and hold it, I guess you could say, versus simply drink it. Why would someone buy it to keep it? As you said, it's lovely, which it might well be. I'm not a drinker myself, Jeremy, but why keep it?
Well, it plays into the idea that you're putting something away that's real. It's something a bit of a physical nature. So there's been so much talk about, Bitcoin investments and even, stocks and shares where you're not buying a physical asset. You're just buying, a share certificate, essentially, or a small share in a business. With whiskey investment, you're physically buying barrels of whiskey. So it's a big barrel, as you can imagine, as you can envisage, 200 litres, I think 53 gallons. The wood is real. The spirit is real. You can go and visit your barrels, and we organise VIP trips for our investors to go and visit the barrels, and that's a really important thing that we do because it really brings home, what they've done, and they get to meet these amazing people at the distilleries. So people like to invest into something that's real, not just a concept or an idea or a spark down a computer. So it makes people feel like they've got something that will be there in 8 years' time. It's not something that will go in and out of fashion. And it plays into people's, that psychology, wealth preservation. It's not, with investments, it's not just about how much you make. It's also about making sure you don't lose your money primarily, but also the emotional dividend of being able to invest into something that you really love. And what could be nicer than investing in your hobby or your passion or your pastime and actually making money from it?
I guess that's the real thing, isn't it? Because people can invest in hobbies, in art, in possibly travel, in homes and things like that. And yet, if you invest in a hobby, that might never go away.
Sure.
So, in some ways, whiskey is just another version of that.
It is, yeah. I mean, it's for most people, their hobby of drinking whiskey is something that they'll probably do all their life. But remember, for investment purposes, with bourbon, for example, there's kind of an 8-year window. So we include 8 years of storage, insurance, taxes. So once the client buys the barrels, we store them at the distillery where they're produced, which means they have very good provenance or history or a track record, which is very important when we get to selling them. So people go in with a knowledge that this isn't just, I'm going to put some barrels of whiskey away and see what happens and get back to it in 5 years, 10 years, whenever. There's almost like a fixed term of 8 years. And in 8 years' time, we will help the investor sell those clients and touch wood, all being well, they'll make plenty of money.
Now, I've heard that you actually were one of the people that brought whiskey investing as an asset into the States. So what was it like before you essentially came along and changed things?
It was very challenging, to be honest. I sort of lived and worked. I was all over the world. I mean, all sorts of really crazy places. And I've been on holiday to the US, but I've never done business here. And I always assumed that the US would be the easiest place to do business. You have that sort of preconception that it's the land of opportunity and capitalism rules and so on and so forth. And, I've lived and worked in places like Russia, the Dominican Republic, all these kind of crazy places, and Asia as well, of course. But starting a business in the US has been the most challenging thing that I've done, specifically because the product that we offer is considered a security by the SEC, who is the body that oversees financial regulator, if you like. The hoops that you have to jump through in order to offer this security to the general public, it's mind-boggling, and it continues to be. It's one lawyer after another. There's so much compliance, so much paperwork. I remember when we were launching the business, the lawyer's saying, we need more risk factors. You have a book of risk factors. I'm like, I can't think of any more. I've been doing this for 2 weeks. He goes, no, we need more. We need 20 pages, not 10 pages. 10 pages not enough. So it was surprising for me how challenging the business environment is in the US. But having said that, of course, there's a benefit as well, that there's a lot of investors here, a lot of wealthy people, of course, and the rewards are great if you can navigate the path, as it were.
So is it a sense of you've got to pick the right whiskey? How do you, I suppose, grade the whiskies, the bourbons, the drinks to decide, like, because some have asset classes, some have high value, low value. I imagine, your experience in art would have taught you a thing or two. How do you work out which is best?
Again, that's a great question. So we have like a research department. We constantly speaking to distilleries. We're looking at the offerings that they put out. One of the key elements on deciding whether a distillery is worth dealing with is the people behind the distillery. So it's a bit like a stock pick. When you're picking stocks and shares, you're not looking just at the products they're producing in general terms, but you also look at the people who are running the business. So, of course, we look for a good track record. We look for brilliant people running the business with good plans for the business in terms of what they're producing, potential expansion, their marketing within the US, but internationally as well. So we look at all these factors. The location is very important. For most investors, if they're looking at bourbon, they want the bourbon most likely to be in Kentucky or Tennessee. We have done 1 or 2 deals in Texas, 1 or 2 other places, but generally speaking, let's say Kentucky is the Manhattan of the bourbon industry. So there's a whole number of, if we look at 100 distilleries, we might highlight one, and then we'll go to the distillery, see if we can do business with them. If we can, we'll purchase, for example, say 1,000 barrels, and then sell those barrels in smaller quantities, 50 here, 100 here, to accredited investors, both in the US and in globally as well.
Do you find then that everyone wins with this? Like, I'm picturing when you said that you buy the barrels, you resell them, you use them as essentially assets that investors can invest in. It sounds like everyone wins with this. Like the distilleries benefit, the people investing benefit, you guys benefit as well. Talk us through how the partnership would usually work.
Yeah, it is a win-win because the reason that a distillery would even do business with us in the first place is because it's a very sort of cash intensive business. You have to, in many cases, go to work, produce a barrel, all the costs involved as well as the hard work involved, and then it can sit there for 8 or 10 years before you can monetize it. So for most distilleries, that just doesn't work. Some Scotch distilleries, we've got bottles here that's 72 years old. So they literally laid that barrel down and they didn't get paid for 72 years. So that's an extreme example. But certainly if you look at bourbon and distilleries in Kentucky, it works very well for them. If part of their allocation, let's say, they can put away, and part of it they can sell immediately. So day one that they produce the 1,000 barrels that we're buying, they're getting paid for them in full. So it works very well for them. Of course, the magic is made by time, and it's only time that can increase the value or increase the quality, I should say. There has been, even the last few years, there was some crazy scientists who were sort of claiming they could fast track the aging process for whiskey. And thankfully, for all concerned, it was horrible. So it does work well. It works well for the distillery. They're getting paid day one. Of course, it works well for us as a company because we're kind of bridging that gap between people within the industry and just retail investors who would normally never have that opportunity. Historically, people have bought and laid down barrels of whiskey and scotch for hundreds of years, but it would generally be people within the industry. So it would be either people working at the distillery or friends of the distillery, and they would say, yeah, I'll take 100 barrels, lay them down. But without those distillery contacts, it would never be possible. So we help to bridge that gap. And of course, the investor benefits through, of course, the financial benefit ultimately, which takes a bit of time. It's at least 8 years. But in the meantime, as I said, he's going to the distilleries, meeting the people there. There's an emotional dividend as well. He's stirring the corn. When our clients first see their barrels piled up, it's a real moment. You can see their cheeks go a little bit flushed. And, you can see that they look very happy because all they've done previously is just talk about barrels of whiskey. So it is a win-win. I said 3 wins, win-win-win.
72 years though, Jeremy. I mean, can you imagine waiting that long before you get paid for something? It's worse than spending ages trying to. I mean, what else takes 72 years before you can...
Nothing.
How would it work? So let's just say you've got an investor, you buy the barrel, but it's new. So do you pass it over as an 8-year barrel, and there's an agreement that they wait 8 years to give it a chance to get to 8 years, if you see where I'm going?
Yeah.
How does that work?
We go out, we will order, let's say, for example, 1,000 barrels from a distillery. And as I mentioned, these will be new make barrels. So we'll say, right, could you, second quarter 2026, please fill 1,000 barrels of whiskey for us. We place that order. We then go out, and sometimes prior to it being filled, but around about the time of it being filled, we start selling those barrels to 50 to yourself, 100 to somebody else. So we will sell those barrels in smaller quantities. So imagine you've bought 50 barrels. So those barrels, you own them. They're yours from day one. You have all the paperwork. You have a username and login, the barrel numbers, all the details. When you've paid for them, we've included the 8 years of storage and insurance and taxes. So there's nothing more to pay. So those barrels are then placed in what we call a rick house, storage facility in Kentucky. The barrels just sit there. We can give you market updates on, general terms, how's the market, further opportunities, of course. You'll no doubt go down to the distillery. Like I said, meet the guys, stir the corn. It's just a waiting game. And then approaching 8 years, we start having the conversation about exit strategies. So, of course, a bit like any investment, how you sell it is as important as how you buy it. A lot of bourbon brands that you see in the off-license or the liquor store, when you see them on the shelf, a lot of them, more than 50%, don't actually produce bourbon, interestingly. So what they do is I wouldn't say marketing companies, but they buy aged barrels in and bottle them the following day, put their beautiful label on, their good marketing, and they sell that bourbon as their bourbon, essentially. So there's always a ready market for really good aged bourbon for not just existing brands, but of course new brands that are coming into play as well. As you've probably seen with beer, with gin, but there's more and more brands coming into play constantly, so that the quality is getting better. The age statements are improving in terms of we see more and more older and older Scotch and bourbon and tequila on the market. So that's the way it works.
What are your thoughts on the ideas of investments? So you've gone from art all the way through to whiskey, and I imagine you've got a lot of experience. How would you see the investment market looking? Because you could invest in property, you could invest in businesses, where I imagine there's a lot of numbers moving around, where you're involved in stuff, in objects, in things that you're purchasing with a view to the value of them going up. So I'm curious as to how you see investing. How do you see it going? Do you see anything on the horizon?
Yeah, I think, of course, my speciality is, we'll call it alternative investments, because I think true alternative would be property or gold, but whereas what we're dealing with is it's a passion investment. So looking at some of the reports, and I think Knight Frank do a really good report on different types of investments. And you can invest in violins, you can invest in cars, in diamonds, and there's hundreds of assets. What we're seeing is that ultra high net worth individuals, if you're going to follow anybody, it's probably a good idea to follow an ultra high net worth individual when looking at investments. They are more and more securing or having somewhere in the region of 10 or 15% of their total portfolio in passion investments. So in whether it's cars, diamonds, whiskey, wine, etc., etc. It creates a balance for them. Of course, again, it's something they enjoy. So we feel that this has become more and more relevant. There's more and more companies like ourselves who are offering the service, not just to billionaires or multimillionaires, but just the normal mum and dad type investors. Just somebody who's got a bit of extra cash is looking to invest it. People are able to do that now. So the market has changed. 30, 40, 50 years ago, billionaires still invested into art, and they realized they were buying art and they said, hold on a minute, I'm making money here. So now there's more and more. If you look at every type of passion investment, there's companies in every country in the world who will advise you, help you, guide you, and just make the whole process easier. So I think that's been blossoming, and in our opinion, that will continue to blossom.
So is that a situation where you've got things that are broken down a bit further to make things more accessible? How do you see the accessibility shifting?
Well, I think, like I say, I think with the internet, I think there's so much more transparency these days. If you look at, like property investment as an example of how things have changed. 15, 20 years ago, if you're looking for an investment property, you get your newspaper out, you go to the back of the paper, see for sale. Right, you'd have to go to, there'd be just writing, no photos. Okay, there's a place for sale in a location that I'm interested in. That's the price. You'd have to go there, look at the place. The place might be crumbling down or completely not suitable. Then you make another appointment the following week, see somewhere else. Whereas now there's so much transparency. You can, first of all, have walkthroughs on videos and You can visit places for sale in Germany if you want, or I don't know, random places anywhere that you wish. The research is incredible. Put in property market, Los Angeles, and there's a million data points that will help you make decisions. The fact is not just for whiskey or property, but in general, and with AI, of course, that's going to make a huge difference on research and what people buy and how they buy it. So much easier these days with the with technology.
That makes sense when you think of how the information's all at your fingertips now, where things are so much easier to find. And I'm actually curious about how you built the CaskX that you run now. So how do you go from art to whiskey? How did you build the
Yeah.
contacts on all that sort of thing? Because if somebody else wanted to follow in your footsteps, I'd be really keen to see how someone could do similar.
Yeah, again, that's a great question. I think one of the, let's say, advantages that I've had in my business career is the ability and the willingness to change location. I think that we've never had to reinvent the wheel with whiskey investment. Whiskey investment was a going concern in the UK mainly, but there were companies that were very successful in their own way, offering a product that was great for them, great for the distillery, like we said, and great for the investor. We were able to take that business model, but introduce it into a much bigger market where it didn't exist. I'm a big believer in you don't need to, like I say, recreate the wheel. You don't need to think of the most amazing, innovative, business idea in order to be successful. What you need to do is find a really good business model and then find a market where that business model will thrive. Part of the reason why there was no whiskey brokers in the US was the complexity of starting the business here. I think that put a lot of UK companies off initially, and it still continues to do so. So if you're determined, you've got a reasonable budget, because in order to relocate to a new country without really having any start there, you need some self-funding, of course, helps. But if your determination is the key aspect, and keep going, at some point, if it's a successful business in the UK, it will be a successful business here in the US.
That's an interesting point in terms of not restricting yourself by your location. How did you manage the travel and going to different places and trying to work out where the business model could thrive?
Yeah, that was it was incredibly complex for a reason. When we first launched CaskX, the intention was to launch it in the US. So I've been living and working in Hong Kong. I've got family in Australia. I'd had a little bit of time off after selling the business in Hong Kong, and the intention was to open the office here. I was going to just obviously, fly across, look for offices, rent a place, get my visa, and we were off. Unfortunately, the month we were looking to open the office in Los Angeles was March 2020, which, if you remember, there was some interesting things going on in the world around about that time. So all of a sudden, COVID went absolutely nuts. I kind of rushed back to Australia, and I was pretty much landlocked there. Australia had very, very strict COVID conditions. So initially, we opened the first office in Australia. And my intended staff, which I'd known from previous businesses, were literally all over the world, but one in Taiwan, one in Singapore, a couple in Australia, one in the UK. Literally, we were global, and everyone was stuck in their spare room with their computer. But it actually worked out very well, because to launch that business at that time, as far as the investors were concerned, everybody was picking up the phone. Everyone had lots of time to look at different types of investments, because they weren't generally going to work every day. people weren't spending money on holidays and cars, etc., etc. So there were available funds. So it worked in our favour in that sense. We opened the second office fairly quickly in Hong Kong. Again, we opened it remotely with one Hong Kong staff, and that went very well. And then finally, when I got permission from the Australian government to travel, which was fairly challenging, but we got there eventually, I was allowed to fly to LA in November 2020, and we opened the office here. We've never looked back. We started selling Scotch barrels to investors here initially. Of course, being in America, we were very quickly asked, could we get bourbon barrels, which was always the intention. Of course, an American product in America for Americans. So we did one or two deals with distilleries in Kentucky and Tennessee. And now 95% of what we do is in the bourbon market.
That sounds like quite the journey, Jeremy. Like, just to be able to do all of that, I guess in some ways having staff or people that you knew that were in those countries would have made a huge difference. So how do you suppose someone else could follow in your footsteps? How could someone else create something similar? It doesn't need to be whiskey, it could be something else, which would be my part two to the question, which would be, is there anything that you think that model could work for? So not drinks or alcoholic drinks or spirits, but is there any other assets that you think could benefit from something similar?
I think the obvious ones, you'd say, again, wine, art. But I think where we were successful, like I said, was the fact that we were flexible in that, right, let's relocate to the US. We could have made it easy on ourselves. We could have been based in the UK and still run the business out of the US, if you know what I mean. So I think when I first started the wine investment business, I was in Sydney, Australia, but we decided, right, we're going to launch the business in Singapore for a number of reasons, but we just felt, right, that will be a market that will be very receptive. We sat down, there was myself and my partner. Initially, I was in my spare bedroom, he was in his. I had a Windows 95 computer, I remember. And we said to ourselves, okay, when we've got 10 clients, we will rent ourselves a small serviced office in Sydney. And we got to 10 clients. And we sat in the office and said, right, when we've got to 100 clients, we're going to move to Singapore and we're going to launch the business properly because all our clients are based in Singapore. So that's exactly what we did. And with technology, of course, the phone calls have become less and less. 20, 30 years ago, your biggest bill would have been your phone calls, essentially. But we were able to essentially launch the business with a few trips backwards and forwards in Singapore from Sydney. So I believe that's something that gives you a good head start. I think that, again, find a successful business model and look at a location where it currently isn't either being sold or thriving, or there's no options at all. Look to launch the business there. Why compete with 100 people if you can find a market where there's no competition?
That's a good point, Jeremy, and I think it's worth acknowledging the fact that sometimes picking something in the wrong area where there's lots of competition can be very difficult. Even if it would work somewhere else, you can set yourself up for a very difficult time.
Yeah, absolutely. I mean, there are benefits to having lots of competition. There's one or two where people are more educated in the market. There's kind of more depth to the market when people look at what you're doing and how you're doing it. But, we spend a lot of time educating people here. Ultimately, if you can find a bigger market with less competition, your life's going to be so much easier. Once you've navigated the complexities of owning a business that's never been owned before with the local government or the SEC or whoever it is. But yeah, that would be my number one tip, is find a market where you've got very little competition.
Let's talk about CaskX then. How can people get involved? How can they find out more about it and find out more about you as well?
Yeah, sure. So, CaskX, we have offices, of course, in Los Angeles here, in Hong Kong, in Sydney. We've got lots of clients in the UK. in actual fact. So we're pretty much a global company. Our website is very informative, CaskX.com, CaskX.com. Again, when people show interest, we understand that you may have no formal knowledge of whiskey investing. So the expectation isn't that you're going to be an expert and just tell us what you want. Of course, we have dedicated brokers who will help to build a relationship, help to educate, so on and so forth. So everything's done with real people. So it's kind of almost like a bespoke approach. Best of all, like I said, when our clients can come to the distillery itself, see their barrels, it's not just about making money. Yeah, we're a business that's set up to help people to profit through whiskey investing, but we appreciate the emotional dividend of, whiskey is not really made to make money with. Its primary focus should be to enjoy. So we never lose sight of that.
Thanks so much for being a guest on the show. Those that are listening, feel free to subscribe, share the show, tell others, and also leave a review wherever you are listening into your podcasts. Jeremy, thanks so much for taking the time today. It's been great, and I look forward to keeping in touch. Thank you.
Thanks for your the great questions, and hopefully we can catch up for maybe a glass of whiskey soon.